Hello, I'm Peter Towers, Managing Director of BIZTOOls. This is the webinar for our members, assisting clients on the innovation journey. If after you have watched this webinar, you have any questions or comments, please don't hesitate to contact me by sending an email, peter@essbiztools.com.au, or making a telephone call, 1800 232 088. Where does the innovation journey commence? I think we need to go back to the very beginning and understand where this whole process starts. To follow through, to understand the full journey. Within your system, you can reflect on flowchart FCO 50 within the research and development component, which highlights how the system works for research and development. It's important to check the team member contracts. Does the contract include an assignment of intellectual property as protection for the company? Some team member contracts over the years have not expressed that it related to research and development type activities, especially if the team member was not normally involved in research and development. So that particular clause might not have been included in their contract. That could prove quite expensive for your client. The contracts for team members should also include an assignment of intellectual property to the business. With contractors and professionals that have been engaged, it's important that there's a confidentiality agreement and also an assignment of the intellectual property. Because as you know, otherwise the contractor still owns their IP that's been introduced, even though your client's paying for it. And this can lead to some fairly nasty situations later on, especially if the intellectual property that's been developed turns out to be very valuable. This is an appropriate time for your client to have a preliminary discussion with their patent attorney, or to find a patent attorney, so that they can get an appreciation of what the protection process that's available to them might be. The prototype needs to be completed. That's what's been started in the research and development phase. It's a good idea to make sure that your client's getting input from focus groups, focus forums, especially once they have a provisional patent, because they've got protection during that 12 months. So they can get some feedback from customers, other business people, and perhaps make some changes, but make sure you stress to the client that it's important that they continue to communicate with their patent attorney. They will need a marketing consultant's report on the commercial prospects for this prototype. What's it going to achieve in the marketplace? Why will people buy it? And what price are they likely to pay? How many could be sold? Where are the best sales opportunities? Is it a product that can be exported out of Australia? What costs need to be incurred from now? You've got a prototype. It might not end up being the only prototype, of course, or the last prototype, because I've seen significant changes occur after a business has developed the first prototype. A lot of this can come from manufacturing businesses and product design people, when they get involved, they say, oh no, that won't look nice, or that won't be practical in the setting that the design is designed for. And at all times during this process, you need to be aware that the client might have run out of money, might have lost the energy, or he starts hearing stories that some companies will buy the prototype, pay him out. Do they want to do that? Or is he just wanting to develop the final prototype and then be able to sell it to a manufacturer and earn royalty payments? There are a lot of questions that come about as the prototype's being developed. And probably the biggest one is your client going to have enough money to complete, to get the final commercial prototype? For 12 years, the Australian government had an excellent program called Accelerating Commercialisation, which supplied up to $1 million on a 50-50 basis to a company to enable them to move from the prototype stage through to a practical, fit for commercial sale product. The Accelerating Commercialisation grant was terminated in the federal budget in May 2023. At the time, the Treasurer indicated that a replacement grant known as the Industry Growth Program would commence later in 2023. AusIndustry are seeking comment on the internet about this new grant. There are some indications that grant money could range from $50,000 to $5 million, but nothing has been finalised yet. So we need to keep watching what happens here, because the Treasurer has committed the government that this will be announced sometime later in 2023. The government's website is the only source of information that I have, and it indicated that this new grant will be targeted at the priority areas of the National Reconstruction Fund, which is an initiative of the current government. So the areas that are mentioned on the internet are renewables and low emission technologies, medical science, transport, value added in the agricultural, forestry and fishing sectors, value add in resources, defence capabilities, enabling capabilities. That list is a little bit narrower than what applied to accelerating commercialisation, but there's still thousands of potential businesses in that catchment area. How many clients do you have that are involved in those areas? And are they developing a prototype? Do they want to be on the innovation journey? Have they started to do research and development? And do you know? Have you talked to them? Unfortunately, I find that many accountants do not understand this innovation journey. And that's unfortunate, because there's a lot of SMEs undertaking this process. So I would urge you to read the material that you have within the ESS BIZTOOLS product packages so that you can give advice. Most people that set out on innovative projects, I find, run out of money fairly quickly. Some of them have run out of money before they've even developed the prototype. So they start going around to their family and friends and associates. So let's look at the funding opportunities that are available. We have Section 708 of the Corporations Act, first introduced over 40 years ago. Originally it had an upper limit of $1 million in 12 months, and a few years later it got changed to $2 million in 12 months, and it's remained the same ever since. A private company can attract up to 20 investors in a 12-month period, the maximum contribution of $2 million without issuing a prospectus, unless those investors are sophisticated investors. Some of these rules don't apply, but I've drafted these on the basis that your clients might be dealing with retail investors. So whilst we've got there that the company doesn't need a prospectus, they will still need documentation. Not many investors that I've come across will hand over money to fund a new company undertaking an innovation project unless they've got an idea of what the money's going to be spent on. So they need a business plan, and they need predictive accounting reports, budgets, key drivers, looking at debtors, creditors, inventory, supplies, how much money is going to be tied up and all that, cash flow forecasts and projected balance sheets, and a realistic business vision. What's realistic? And this will be closely linked to the marketing report. How many widgets can be sold and at what price? And what costs are going to be incurred in getting your client into that position? We then turn to early stage innovation company. Now this is basically based on section 708. A company can qualify for the status of an early stage innovation company. And I'm always surprised and a little bit annoyed when I find that an SME inventor has gone off and talked to an accountant and got a very negative response because the accountant knows nothing about early stage innovation company. If we're going to act for SMEs, I think we need to know some of the key matters that affect them. It's not just bank accounts and debtors and creditors and tax returns. They need to be able to fund their projects. And the last federal government introduced this legislation to assist them to do this. So they made these companies attractive to investors. Why? Because these companies needed to raise capital. So what do investors get? Well, they get 20% of their investment in a qualifying early stage innovation company as a tax offset. Now, the maximum for a sophisticated investor is $200,000. So to get that, of course, they've got to invest $1 million in the company. And for a retail investor, the maximum offset for tax purposes is $10,000. That's because the maximum amount that a retail investor can invest in an early stage innovation company is $50,000. And if the shares are held for longer than 12 months and less than 10 years, there's no capital gains tax on those shares when they are sold. So it's not a bad deal from an investor's point of view. And investors have an awareness, some investors do, of the benefits of investing in an early stage innovation company. Sorry, I'll just go back to where I was. The company itself doesn't get anything additional other than, obviously, it gets some investment funds from investors. Now, there is a process. There are 3 tests of which the company has to be able to pass 2. The first test relates to the age of the company. The first group of companies that will be approved are under 3 years of age. There is some provision for companies up to 6 years of age to be accepted, and that's fully summarised in our material. The company needs to have a turnover of less than $200,000, not including any grant funds received from the Accelerated Commercialisation Grant. And this income figure is for the previous 12 months. So that would still apply. Accelerating Commercialisation Grants only finished taking new inquiries on budget night in May, but the current participants in that program, and they had 2 years to which to complete, are still involved. So you could still have companies receiving accelerating commercialisation grants that income is not included in the upper limit of $200,000. And I assume that when the government has finalised their plans on the replacement to accelerating commercialisation grants, that new grant will then be factored into the early stage innovation company legislation to replace accelerating commercialisation grants. And the company cannot have expenditure exceeding $1 million. That includes research and development, everything, $1 million. And both the income and the expenditure figures are in the previous 12 months. If the company passes that test, it can then go into one of two tests. The first test it can look at is the gateway test, where the company has to earn 100 points from undertaking various activities. For undertaking research and development, it can earn a minimum of 50 points and a maximum of 75 points. But this must be research and development that's been submitted to the tax office as part of the tax return. So it's got to be legitimate research and development in accordance with the research and development tax offset. So that means that the company's financial accounts need to be lodged promptly so that that process is going to be cleared. And there are other items. If the company has been admitted to the accelerating commercialisation grant, for argument's sake, it earns 50 points. If it's already raised more than $50,000 from arm's length investors, it earns 50 points. If it already has a patent, it earns 50 points. If it has a registered design, it earns 25 points, and so on. So the maximum is 100 points. Now, if it can't accumulate those 100 points and be able to prove it in the documentation that I would imagine you would be preparing for your client, it can then move into the principles test. Principles test, there's 5 questions that want responses. Now, my experience in dealing with Oz industry over a long time, you need to be able to supply at least 1 page to each of those 5 questions. Some people I've worked with have supplied a lot more than 1 page, but they've documented, or they've had an external expert undertake work on those questions. Now, you can read the questions in the ESS BIZTOOLS early stage innovation company product package, where it's fully summarized. This is a great initiative to be able to help companies who are on the innovative journey, to be able to make themselves attractive, to be able to raise some capital, because the investors get an inducement. The next one I wanted to talk to you about is crowdsourced funding equity raising. Now, crowdsourced funding equity raising has been operational in Australia now for about 6 years. From reports I read a few weeks ago, over $230 million has been raised by these companies. There was an article written by one of the intermediaries, crowdsourced funding intermediaries, last year, which indicated that the intermediaries were only approving around 3% of the applicants, and about 2% of the applicants were actually raising capital. Why? I suspect that the reason is that people were turning up and talking to intermediaries that had no idea what crowdsourced funding was all about, had no idea of corporate governance, had not prepared business plans and predictive accountants reports. In other words, they needed assistance. And that assistance, I believe, should have come from accountants. So hopefully you are communicating to your clients that you're able to assist them there, because a company with a turnover of less than $25 million and gross assets of less than $25 million and not listed on a stock exchange anywhere in the world can raise up to $5 million in a 12-month period and go back to the market again the following year and the following year to raise up to $5 million each time. That's a great scheme. The intermediaries are now well prepared, or at least 4 of them are. That's unfortunate. There are 16 intermediaries that have been appointed, but because of lack of deal flow, it would appear that around 12 of them have gone off and done other things. I'd like to see 16 intermediaries flat out handling crowdsourced funding applications. And the only way that will occur, I think, is if accountants are there proactively talking to your clients about this, helping them get this work prepared and assisting them on this journey. And there's good fees in it for you. Please have a look at it and then promote to your own clients and then promote generally in your area. Go and talk to some of the startup business assistant organisations. Make yourself known to the Oz industry and state government people working in assistance to small businesses space, that you're prepared to help clients in this area. You might be surprised the number of inquiries you will get. And then you can help them pre-qualify before they have a discussion with a crowdsourced funding intermediary. We really need to get that percentage a lot higher than only 3% of the people that applied. On my reckoning, that was about 1,680 for the year that the report related to, which was 2 years ago. And of that, about 140 got approved or raised money. Not enough. So that's crowdsourced funding, equity raising can assist. There's some further notes that I've prepared there. There's rules and regulations. You should become familiar with those. They've been embedded in ESS BIZTOOLS for 6 years. They're there for you to use. If you've got any questions about them, please contact me. If you think we should be having a separate webinar on crowdsourced funding, equity raising, and then on early stage innovation company to really go through the nitty gritty, let me know, please. We did ask for suggestions for this series of webinars, and most people said you arrange it, Peter, so we've arranged it. We're looking at the innovation journey. But if you want more information, please contact us. I think there's considerable work opportunities for accountants in this process. Your clients need mentoring and advice on the research and development tax offset rules. 2 days ago, I got a message from Dale Crosby, who operates For Accountants, a very popular website whereby you can go onto there and check who supplies services to accountants. ESS BIZTOOLS has been a long-term supporter of For Accountants. Dale contacted me and said, a business has contacted me about early stage innovation company claiming they cannot get an accountant who knows anything about it. Can you contact the guy? Well, I telephoned the gentleman who's got an invention underway, and his dilemma is he's got an investor ready to put a considerable sum of money in as an investment, but the investment is hinging on the investor being able to claim the tax offset. And that's reasonable, isn't it? He's putting in a fair bit of money. He happens to be a sophisticated investor, so it's a significant tax offset that he will earn from that investment. The business person, the inventor, told me that he contacted 16 accountants around Australia and no one could talk to him about early stage innovation company. I'm staggered. I hope none of them were ESS BIZTOOLS subscribers that he contacted. I think we have a service to supply to SMEs in Australia. It's difficult conditions out there at present. Interest rates are going up. There's a lot of uncertainty. Yet there's still people prepared to invest. This particular gentleman has an investor ready to invest in his company. But he just wants to know that at the end of it, he's going to be able to claim the tax rebate based on his investment. No response out of 16 was not a very good feedback for that particular gentleman, who rang people in 3 separate states in Australia, he told me. So I think there's some real opportunities there for you. We're looking at work opportunities for accountants. I think many of your competitors are obviously very much unaware of the benefits that can accrue to SMEs from research and development and early stage innovation company and crowdsource funding, equity raising, and also the benefits that can accrue to accountancy firms, because this is interesting and challenging work. Many accountants are telling me that there's problems of attracting staff and retaining staff. Well, Andrew Geddes has been talking about that in our various podcasts for the last 4 years and saying that we have to be offering people interesting and challenging work. I can assure you the process involved in helping someone undertake research and development, get themselves ready to be able to comply as an early stage innovation company or a crowdsource funding equity raising company, is most definitely interesting and challenging work. Because also they'll need business plans, budgets and cash flow forecasts, projected balance sheets, and a clear idea of their vision, an appreciation of how they're going to maintain the key data, the key performance indicators, the accounting system they're going to have. This is real business opportunities. So I would urge you to have a very close look at it, please. Obviously, there's more work. There is tax work in all this as well, because there's a special report for research and development that has to go to Oz Industry. And this is a complete summary of the research and development projects. And then the Oz Industry issue a reference number, which you can then include in the tax return. And the benefit of that is, A, it's an indicator to the tax office that the company has submitted their detailed information on the research activities to Oz Industry, pardon me, and they cast their eyes over it. But very importantly for a young company, if they're trading at a loss, they're able to claim the tax offset, 43.5% of the legitimate research and development expenditure. Remember, it's got to be over $20,000 is the minimum expenditure. So up around $8,500 they get in any case, and it could be a lot higher if they've spent $100,000 on research and development projects. The tax office will pay that to the company's bank account within 30 days of the tax return being lodged, as long as all of the information is supplied. And the key bit of information, of course, is the reference number that Oz Industries has issued, because that's the indicators of the tax office. Everything's okay to proceed. But please bear in mind that your client must have kept the records that are required for research and development. It's just not a matter of spending money. Timesheets need to be retained, and honestly prepared timesheets. If you've got invoices from contractors or professionals for having undertaking research and development work, that needs to be properly documented. Within ESS BIZTOOLS, we've got a complete system. It's taken us a lot of hours to prepare that. I would urge you to use it with your clients. Because remember, this is all on self-assessment. And some of these follow-up checks from the tax office and Oz Industry can be 4 to 5 years later. And you don't want to go through that embarrassment that your client hasn't got the records. I see your role has been an audit role here, making sure the clients kept the records and make them aware that you're going to be charging them $5,000, $6,000, $10,000 more because they're involved in a detailed research and development project. And it could be a substantially higher. I've done very high fees on research and development projects where there's been a few $1 million involved in the research and development offset claim. So please have a look at it. If you've got any disagreements on what I've said in this segment, please let me know. And if you've got any suggestions as to how we as a group that do have this information that ESS BIZTOOLS has developed can get that more clearly out into the marketplace, I'm happy to talk to you. So there's a few more things there that I didn't mention. Obviously, the preparation of the business plan. You can't raise capital unless you have a business plan, budgets and cash flows. And then, of course, we've got the financial interpretation of the business plan in the predictive accounting reports. Assisting in the documentation for clients trying to raise money under Section 708 of the Corporations Act. As I said before, even though there's no prospectus required, the investor will still want to see documentation. We've talked about the early stage innovation company. I think that's a great bit of legislation because it's got this carrot there for investors. And you could also help the overall situation with early stage innovation company by making sure that those clients who have got spare money, who do invest, are aware of the benefit from investing in these sort of companies. I suspect some of them know. I suspect a lot more don't know. And the crowdsourced funding equity raising, as I've got there, it's important to understand the process, understand the role, the responsibilities and the duties of the crowdsourced funding intermediaries. They wear two hats. They represent the government. They represent the Australian Security Investment Commission, but they also are promoters and marketers. And that each of them have thousands of potential investors on their databases they're going to contact. So I think there are significant and interesting and challenging opportunities for your firm to activate with your clients. Find out what people are doing. Make sure if they are undertaking research and development, they've got themselves into a company, that they're not doing it as a sole trader or in a partnership, because they will not be able to claim the research and development tax offset. And make sure that they're spending the money from the company that is going to be the claimant of the research and development tax offset, and the company that is going to be trying to seek investment funds under the early stage innovation company requirements. If you have any questions from what I've discussed in this webinar recording, please send them through to me, peter@essbiztools.com.au, or you can telephone me and we can set up a Zoom meeting, 1800 232 088. I would love to hear from you. So thank you from the team at ESS BIZTOOLS for your interest in our products and services. We would like to work more closely with each of our subscribers, our members, to assist you to really claim an important segment of the business advisory market. A lot of the firms that had not embarked on advisory services like you did are now looking at advisory services. My sources tell me a lot more people are starting to think about what the tax commissioner had to say 18 months ago. and what other people are saying in the marketplace. And this is all part of this talent attraction and retention issue as well. Advisory services definitely does offer a range of interesting and challenging work. There'll be some boring parts of it, there's no doubt about that. But there is some different work there that people who are normally involved in preparation of annual accounts and tax returns don't get involved. So thank you very much for your support. I hope we can be of assistance in preparing material that you can use to help your clients navigate through 2023-24. Have a great day. Goodbye. Thank you for being with us.